Capitalism, the dominant economic system embraced by the West, has undergone significant transformations throughout history, revolutionizing people's lives and livelihoods. However, in recent times, doubts have emerged about its viability. Figures like Bernie Sanders and Alexandria Ocasio-Cortez have criticized its shortcomings, while even influential billionaires have acknowledged its failures. Debates at prestigious events like the World Economic Forum question the relevance of traditional capitalism in the modern era. With uncertainty looming, the question arises, is capitalism approaching its end? Hello and welcome back to another video on our channel, Finance Sense, covering all the latest trends on the financial markets and the economy. But before we begin, make sure to like, subscribe, and click on the notification bell to stay updated with our videos. Without further ado, let's head on to the video. Capitalism, an economic, political, and social system, is one in which private individuals and corporations, as opposed to the government, possess all property, businesses, and industries. This economic model is based on the principles of free market competition, private property rights, and profit-driven exchange. In a capitalist system, individuals and companies have the freedom to acquire and own assets such as real estate, manufacturing equipment, and construction facilities, which are considered capital and essential for production. One of the primary mechanisms of capitalism is the use of wages to incentivize individuals to work for businesses. Workers are typically compensated with wages or salaries in exchange for their labor, skills, and time. The amount of compensation may vary depending on factors such as job demand, skills required, and market conditions. Businesses aim to attract and retain workers by offering competitive wages and benefits. In addition to working for wages, individuals can also participate in capitalism by investing their money in companies. When individuals invest in a company, they contribute capital that can be used for business operations, expansion, or investment in new ventures. If the company they have invested in performs well and generates profits, the value of their investment can increase, allowing them to earn returns on their capital. The origins of capitalism can be traced back to the 17th century when European colonial powers, including France, England, and Portugal, held significant global influence. During this era of colonialism, these powers established extensive trade networks, exploited resources, and established colonies in various parts of the world. These economic endeavors laid the foundation for capitalist systems, as private individuals and corporations sought to maximize their profits through trade, investment, and resource extraction. Over time, capitalism spread across the majority of the planet, particularly during the 20th century. However, its expansion was often accompanied by social upheavals and conflicts. In many instances, the concentration of wealth and power within capitalist systems led to social inequalities, labor exploitation, and political tensions. These issues have prompted various forms of resistance, including labor movements, advocacy for workers' rights, and the development of alternative economic models. China, previously a staunch communist country, has also accepted state capitalism. As a result, private enterprise constitutes a sizable and growing portion of the economy, while the state has a controlling interest in and responsibility for directing key industrial and service sectors. Currently, the most common kind of capitalism is shareholder capitalism. World business elites have accepted this principle for decades. The key concept? Return a profit to your investors. This concept was developed in the 1970s by American economist Milton Friedman. He maintained that a company's sole purpose should be to maximize profits for its shareholders within the bounds of the law. The vast majority of company boards agreed with the statement, and at that moment, that was the best option. The American business sector had become overstaffed and unproductive. Politicians like Ronald Reagan and Margaret Thatcher supported shareholder activism as it grew into a movement. The collapse of the Soviet Union provided further proof. Greed is good became the motto. Economists are generally in agreement that this style of capitalism was beneficial. During the following decades, hundreds of millions of people profited because profit-driven corporations expanded into previously untapped markets and produced millions of job opportunities. But at this point, a growing number of people are arguing that we've gone too far in the opposite direction. Shareholder capitalism has been criticized on the grounds that it has resulted in 3 significant negative outcomes. They claim it has harmed the environment, increased inequality, and slowed economic development. Although climate change has been a pressing issue for many years, it was not until 17-year-old Greta Thunberg rose to prominence that world and industry leaders paid attention. She skipped class in August 2018 to protest climate change by camping outside the Swedish parliament. Thunberg's protest inspired a global surge of similar actions. with students demonstrating in front of parliament and municipal buildings. Some environmentalists worry that putting profits first will lead to irresponsible actions like fossil fuel drilling. As a result, the world has been damaged, and the consequences are becoming increasingly visible. Between 1993 and 2016, Greenland experienced an annual ice loss of around 286 billion tons, whereas Antarctica experienced an annual ice loss of approximately 127 billion tons. Another issue is the widening gap between rich and poor. As developing nations like India and China have embraced capitalism and free markets, global inequality has actually decreased. However, the gap between the wealthy and the poor in every nation has grown wider. The board of directors use executive compensation to influence CEO behavior to benefit shareholders. CEO pay has increased by a factor of 940% since 1978. However, the average worker has only received a 12% increase in pay. Consider the case of Amazon. Jeff Bezos, the company's founder, is the world's wealthiest individual. However, the tech giant has been hit with several reports and allegations of unfair treatment of its warehouse employees. This is not unique to the United States. 1% of the world's population owns nearly half of the world's wealth, while the lowest half of adults possess less than 1%. Many may feel this gap is unfair, and some may even argue that the excessive focus on profits is stunting economic expansion. The CEO of BlackRock, the largest asset manager in the world, agrees. In an open letter to the CEOs of the world's largest firms, Larry Fink said that the pressure to maintain high stock prices has resulted in underinvesting in innovation, skilled workforces, or essential capital expenditures. According to him, companies are putting short-term profits ahead of long-term value, and as the rich get richer, less of their money is trickling down to the rest of the population. As 2019 began, the wealthy began cutting back on their expenditures on everything from real estate and artwork to jewelry and consumer goods, fueling concerns about a possible trickle-down crisis. However, the average customer is more inclined to spend their money, which promotes economic expansion. These issues are contributing to the growing opposition to contemporary forms of capitalism. Only roughly 1/5 of American adults between the ages of 18 and 34 have positive feelings about capitalism, with the majority having either indifferent or negative reactions. This shift in opinion may be leading some members of the 1% to rethink the foundations of traditional capitalism. On the other hand, there is something called conscious capitalism, which is also sometimes referred to as stakeholder capitalism or inclusive capitalism. All of these terms point to an economic system with more ambitious objectives than simply increasing profits for shareholders. In this context, stakeholders refers to a company's employees, customers, community, partners, governments, and suppliers. The oil industry, for instance, must consider the environmental effects of its operations and the fact that fossil fuels have a finite supply. Similarly, a retail fashion label should think about the people who make their products and the conditions they work in. As part of its 50th anniversary celebrations, the World Economic Forum issued a new Davos manifesto in the Swiss Alps. It establishes moral guidelines it believes will serve as a roadmap for businesses. Businesses have been urged by the World Economic Forum to combat corruption, promote human rights, work for equal opportunities, and pay their fair share of taxes. The business sector's top executives have begun to voice their approval. The Business Roundtable, an organization of almost 200 CEOs of large U.S. companies, announced in August 2019 that generating profit for shareholders was no longer the primary objective of their businesses. Moreover, sustainable investment is gaining popularity on Wall Street as an approach that considers environmental, social, and corporate governance concerns. The Global Sustainable Investment Alliance estimates that the total value of these investments increased to more than $30 trillion in 2018. The number of businesses like Patagonia and Tom's Shoes that aim to do good in the world is growing every day. But is this all talk without any real plan of action? Critics argue that stakeholder capitalism is nothing more than a PR ploy by the bigwigs of business, technology, and finance. Supporters of shareholder capitalism argue that the system will inevitably collapse if corporations have too many goals. So, is capitalism doomed? According to the discussion taking place in Davos, the answer is no. It is merely changing through time. However, the success of an approach like stakeholder capitalism is still up in the air. It sounds like we've reached the end of this video. If you found this video helpful, please hit like and subscribe, and comment down below your thoughts in the comment section. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you next time!